Why does the float matter when day trading? What am I talking about? What is the float when it comes to day trading? Talking about it in this video, so stay tuned. What's going on, guys? Patrick here. Today we're talking about float size and understanding why it's important to know how large the float is on the type of stock that you're trading. So normally these stocks that I trade are small cap, small float, very limited amount of shares available to the public. So first, let's take a look at a small cap float like NFEC. This morning, it went from $1 up here to, where'd it get? $3.65. So that's almost a 300% move, over 200%. This is a massive move, really on kind of low volume for this type of move. You got 1 million shares traded here. You got 1 million shares on this next candle, 982,000, and then 1.4 million there. Total, you have about 3 or 4 million shares traded in about 15 minutes, and the stock went from $1.20 up there to $3.60. So you had this massive move with really very small amount of shares traded. Now for a large cap stock, you're going to need a lot more volume and a lot more action to really get the stock to jump that fast. And that's one of the reasons a lot of people trade these small caps, because they're looking for stocks that have possible news, certain catalysts that are coming out. A lot of the biotechs have small floats, and any type of news will send these stocks to the moon. NFEC today got news that they had a $2.5 million contract was signed. That's why the stock went from $1 up there to $3.60. Obviously, there's going to be some short covering. There's going to be short squeeze stuff going on there. But in general, with a small float, it's much easier to move a stock. You're also going to get people who are pumping these types of stocks. Someone with a large wallet, someone with a lot of money could buy NFEC and pump it up, and really move the stock with only having to buy, 1 million shares, 2 million shares, or whatever it is. If somebody bought 1 million shares at $1, they put $1 million into this, they could literally move the stock up 200% and then dump it on everybody else. So when it comes to these small caps, a lot of times that's what people are focusing on. They're focusing on small caps with very limited float. Another stock that would be a great example of this would be RKDA. So RKDA has been going crazy. If you look at the daily chart, 60-hourly chart, was at $6.40. Look where it got to. It got up here to $66. So a massive move here on RKDA. It's been going crazy. A lot of people have been trading it. But again, it's a very small, it's almost a micro float. This stock has, RKDA's float is 2.1 million shares. So a very small amount of shares total. That's 2.1 million shares outstanding. This day here, we got over 2.1 million shares on these hourly candles. Literally, people are just getting those bumps, bump, and dumping and dumping and rotating the float over and over. And look at this move there from $10 up there to $50. Very important to understand the difference between a small cap with a small float versus a large cap with a larger float. Now, let's look at a company like GoPro. Over 100 million shares issued. It takes a lot more volume to move this stock up and down. For example, we'll say here, this big sell-off after the earnings they had, it dropped from 718 down there to 504. It had 59 million shares traded. Imagine if NFEC had 59 million shares traded. It would probably go to like $50. A stock like GoPro has a lot of shares out there. A lot of people who might dump the shares, or they might hold the shares. They really kind of flood the market. You might have a lot more supply than there is demand. So that's one of the issues with these large cap stocks, where a small float stock like NFEC, there might not be that many shares out there. So when the stock does start moving, the supply is much lower. So remember, this is supply and demand. The less people that are selling, the more people are pushing the price up to buy. So if the price is at $2 and there's no sellers until $2.20, but there's a lot of buyers, what's going to happen? The buyers are going to start stepping on top of each other, on top, until you get that $2.20 area. And then finally, you're going to get that buy there at $2.20. It's very important to understand the float, to understand why a small cap with a small float can move much more rapidly than a large cap like GoPro, which only moves, $2 even on bad news. So imagine if NFEC got really bad news, this stock would probably go for $4 to $0 in minutes. Most of the time, the reason they go up so much because they have such a small float. And that's what a lot of these day traders are looking for stocks with small floats, with news, with the possibility that these things are going to go up 300, 400, 500%, depending on the news, depending on how small the float is. So there you go, talking about small float stocks and why it's important to understand the difference between large caps with large floats and small caps with small floats, depending on the two. So there you go. If you guys want to learn more about day trading, do me a favor, hit the like button, leave a comment, and hit that subscribe button if you guys haven't already. I will talk to you guys later on.